This is Natalie Pace, and thank you for joining me for my free video conference. We're going to be talking about what's hot for 2026. So, in 2025, we had silver, we had copper, Peru, clean energy, the Magnificent Seven. These were all superstars in 2025. But what is going to be hot in 2026? And why are investors rotating into Chevron and Caterpillar and out of the Magnificent Seven? And is that trend going to continue? We also want to realize that this is a midterm year. And if it goes true to form like 2022 and 2018, what does that mean? So all this and more, again, you can always email us at info@nataliepace.com. And I do encourage everybody, if you haven't looked at your retirement accounts and, consider them all together, your savings, your crypto, your retirement, and put them in an easy to understand pie chart so that you can see if you have an age appropriate plan. Now's the time to do that. You can learn how to do it and implement it at our online financial freedom retreat. The next one is in spring, and you get the best price if you register by the end of February. It's a good time to do this because stocks are still very close to their all-time highs. Okay, so let's jump right in. Investors in 2026 have been capturing gains, and by that I mean investors, I mean the Wall Street whales. They have been capturing gains on the Magnificent Seven and rotating into Caterpillar and Chevron. Why are they doing that, and is it a great idea? So let's go ahead, and I'm also going to show you a few blogs that I have, and I will be linking to them in the description. So just look at the description on YouTube, and you should be able to find the links to these exact blogs. So this one is one I just posted about the investors going old school and leaning into some of these Dow components and whether or not it's really a great idea for you. So we see that Caterpillar is up 36% year to date, Chevron is up 20%. And this is as opposed to the Magnificent Seven that's really been pulling back. The worst case scenario would be Microsoft. Again, you're going to see all these charts in this blog at nataliepace.com/blog. But the interesting thing is that people are rotating into dividends and really pushing up industrials, and they're also rotating into oil, right? And so they're looking for a little bit of income, and they've pushed the prices up. But what's also happened is they've pushed up the price earnings ratios, and it's really lofty. When we see price earnings ratios, when things get too expensive, we see people wanting to capture gains and volatility increases. So what I would say is this. There's a lot more debt leverage, low or no revenue growth, very low profit margins in a lot of these companies that people are rotating into just for the dividends without understanding all of the other things that are necessary for due diligence. We are, in fact, using value replacement funds because you can often get a higher income and get a little country diversification by doing so. As one example, Peru was one of our picks and still is, honestly, although I would capture gains because it more than doubled. It's actually more than tripled over the last 5 years. So it's a good time when you're using our pie chart system. If you have a slice that becomes three slices, it's screaming at you to sell high. And then you can, of course, say, well, do I think it's still going to be hot going forward, which is, of course, the subject of this. And copper prices are expected not to skyrocket, but to continue to go up due to high demand and that the supply can't meet it. That does bode well for Peru, which was our pick on how to play that, which also provides an income. We're using it as our mid-cap value replacement. So we do have large cap value replacements and also small cap value replacements. Again, we talk about all of this at our Financial Freedom Retreat, or you can check me out with my private coaching. But that's a couple of the things that I did want to talk to you about was, those kinds of things, like what was hot in 2025 that we think could continue being hot in 2026. And definitely Peru, EPU, is one of them for the copper play. Now, silver has taken a lot of heat because it is actually down From its high, it's off 40%. But what people are missing, if that's the only thing they're looking at, is that silver was the top performer last year by far. And, we had also picked one that even performed better than silver, First Majestic Silver. And there are reasons for that. Do I think that silver, even with the pullback, silver can still be very hot. So I think that the things that make these perceived safe havens desirable are, there. They continue to be there. They could increase. And I do think that the case, gold and silver are both those emotional plays. And I do think, as I did last year, that silver was going to be a better choice than gold. I do think so as well. So again, don't be too hung up on headlines because the pullback of 40% is not reflective of what silver really has performed. And it is also a reminder that rebalancing to capture gains is really key because if you had captured gains when it, flew up to 121, right now, you would have kept that money. Maybe you would want to buy a little bit more. So, the other things that we thought were hot last year, clean energy, I think that could still be a performer. It's not reached its highs of 2021, and it certainly hasn't reached its all-time high yet either, although it was one of the top performers. And look, all of these things performed a lot better than our Magnificent Seven companies and even NVIDIA. So in our pie chart system, we have small, medium, large caps. So we want you to be well diversified, value and growth. But we also have four hot slices. And we'll talk about other potentials for hot slices, which could include, you could break it down. It doesn't have to be the Magnificent Seven. You could actually lean more into artificial intelligence. The bulk of that would probably be NVIDIA, but it would also include advanced micro devices and some of the other leaders in artificial intelligence. And you could also lean into cybersecurity. And I think there's a very strong case for cybersecurity being hot as well. Most of these are trading either at or very close to their all-time highs. So if you don't have them, then dollar cost average in. Again, we talk a little bit more about how you might do that at the retreat or through my private coaching. And if you understand dollar cost averaging, then you know how to do it. And in terms of people that already have it, you should be capturing gains. Now is, again, I've already said this, but it's a great time to do your rebalancing. You want to be rebalancing at least once a year. And with stocks still very close to their all-time high, it's a great time to do that rebalancing. Um, we'll talk a little bit more about the midterm years in just a moment, but I want to show you some of my more recent blogs so that you can get additional information. And I also want to talk a little bit more about Chevron and Caterpillar. So if we look here, what we see is that energy was one of the worst performers last year. Industrials did okay. They did nothing like our silver, our Peru. Google was a superstar, but even clean energy, right? And Peru also pays income, as do a couple of our other value replacements. The thing about Caterpillar and also Chevron is that both of them are, and I think it's important to realize that last century companies tend to have much higher debt, much more leverage, much smaller profit margins, and maybe little to no revenue growth. Now, Caterpillar did have some revenue growth, but it also has a price earnings ratio that is usually reserved for fast-growing technology. So it's really expensive right now. I would be very cautious about it. And most people, honestly, it's a better idea for you to have funds. You can get super targeted. We just talked about you can get a cybersecurity fund. You can get a silver fund. You can get a Peruvian fund. You can get, all of our mid-cap value replacements of other countries are funds. They're not just an individual company. So, that's an important thing to be considering as well. And I did outline in my blog some of the case of why I think that Chevron is not your best choice. Um, Gasoline prices and oil prices are lower than they've been trending lower, and they are expected to go lower this year as well. If you have your profits based on a commodity and the price goes down, that means your revenue goes down, and that means your net profit margin goes down. And both Caterpillar and Chevron actually have lower net profits than they have on the 5-year period in 2025. It's not expected to do much better in 2026. Probably not, and probably worse, right? So I think that's important for you to realize that the outlook for oil and gas is not great because the demand largely has been going down, and that has a lot to do with electric vehicles. So, again, we talked about some of the things that I think are going to be hot. We have a couple of other picks that we talk about it at the retreat. But I think I should also mention Bitcoin and crypto because it's off by almost half of its high. Now, when we look, crypto was, and this is one other chart that I wanted to show you. 2022 was a year of a midterm year that saw losses. So the S&P 500 lost 19.44%. Look, the bonds are not supposed to be losing 26%. They lost even more than stocks. So that's a problem. And I talk about that for a full day at our investor educational retreat. It's also covered in my blogs. But here's the performance in 2022, right? So what you can see here is that Bitcoin and Tesla and the Magnificent Seven companies, they were the worst performers. And honestly, when the markets do go down, Magnificent Seven is leading them down. And it's not because they're not great companies. They are. It's because they're overpriced. They have been very expensive. And so when the whales take their profits and they take them in bulk, then the price goes down pretty fast and it drags everything down. I do think that that's a case to be made. Again, you've made a lot of money on Magnificent Seven on your large cap growth. So if you have those funds, now's the time to capture gains. I don't think they're going away. I don't think we're going to stop using artificial intelligence or stop doing our Google search or stop using our Apple iPhone or, here I am on Zoom. And of course, I'm using PDF files and I'm using Excel files and Word documents. So I think that technology is going to do fine. It's just expensive. And that's why we do that rebalancing so that when things do have strength and go way up, that we can capture and keep the money, right? Instead of riding it up and down, up and down, up and down. So Bitcoin was one of the worst performers in 2022. It was doubled in 2023. It doubled again in 2024. We had named it our investment of the year in 2024, but I also warned, and I had a chart outlining about a trend, a halving historical event trend. And it basically was this. I said that you usually hit a high the year after the halving event, and then you hit a crypto winter 2 years after the halving event. So I was warning that people should be ready to take profits if they did invest in Bitcoin in 2024, in 2025, and that 2026 could be weak. So if you're thinking about crypto as a hot slice for 2026, I would say no, but we had warned about it 2 years ago. And when does it start to come back? Well, they do have a crypto winter. I also talk about electric vehicles. I think you should, if you're interested in Tesla or electric vehicles or electric vehicles technology, there is a fund for that. IDRV. You want to definitely read my blog on crypto winter and also EV winter before you do. All of that's at Natalie Pace /blog. If you have trouble finding it, email info@nataliepace.com. But in the crypto winter blog, what I outline is that, it looks like the next halving event could be coming in 2028. And of course, investors start pushing the price up more quickly than that. It's not, real fast, right? Like usually the crypto winter is about 18 months, could be up to 2 years. So, we may not have hit the bottom yet on the crypto winter, and I don't think it's going to come roaring back fast. So I wouldn't call it a hot. All right, so you know that you can always email info@nataliepace.com. I do again encourage you to join us at our spring retreat online. It will change your life. It pays for itself for most people in the first few months in budget savings alone because we can teach you how to save thousands annually in your budget with smarter choices that don't require any change in lifestyle. It's just smart. Stop making billionaires rich and keep that money for yourself. And there's some really good life hacks in there. But of course, if we can save your nest egg and get you involved in a lot of these areas that we have been involved in, silver was a hot slice. That one almost actually tripled at its high. Copper and that Peruvian fund has more than doubled and earned income. Clean energy is super performers. So when we're showing you how to perform at the top of Wall Street on your at-risk side, how to earn 3.5% safely with no paper losses on your safe side, and doing that consistently now for decades, I think this is very important for you to be employing in your life because the truth is, the sooner you get this information, the faster your life will transform. So do join us at the Financial Freedom Retreat, the spring one, and register before February so you get the best price. You can learn more here, the 15 plus things you'll learn, and you can also read testimonials of various people, including Nobel Prize winning economist Gary Becker, who wrote the foreword to my first book, enthusiastically recommending the strategies I teach there, and also former chairman and CEO of TD Ameritrade, Joe Moglia, and also lots of Main Street folks whose lives have transformed by using they're easy principles. We should be taught them in high school. I call it life math. So 310-430-2397 if you want to call, and email info@nataliepace.com. Thanks for joining me.